Hey guys, it's Ginny Silver, and today I want to talk to those of you self-employed individuals about how you should plan for setting aside money for your income taxes. One of the biggest mistakes that newly self-employed individuals make, and even those who have been at it for a few years but aren't great at planning, is knowing how much to set aside for self-employed income taxes. First off, I want to let you know that I am not a CPA. I highly advise that you check in with your own CPA on all tax questions. First off, who has to pay self-employed income taxes? Well, if you're self-employed and you earn $400 or more over the course of the year, you are required to file income taxes with the IRS. Now, you're going to be required to pay two types of taxes on your self-employment income. Number one is income tax. Income tax is going to be broken down in accordance to your income tax bracket. Everyone's is going to be different depending on how much they earn and a few other factors. Secondly, you're going to be subject to paying self-employment tax. Because you are self-employed and you are not on someone else's payroll, you are not having Social Security and Medicaid automatically withheld from your earnings. Self-employment tax covers those two things. The self-employment tax rate is 15.3%, which breaks down into 12.4% allocated for Social Security and 2.9% allocated for Medicare tax. Now, you can get down to very detailed specifics and calculate out exactly what you might owe based on what your net earnings are going to be, which will be your overall sales minus your deductions and expenses. And then generally speaking, 92.35% of your net earnings are subject to self-employment tax. In 2021, only your first $142,800 is going to be subject to Social Security tax. Now, that is complicated, and I do not actually recommend setting aside your tax money based on those calculations. Why? Because they're very detailed and they're very dependent on what your net income is going to be. Now, at the end of the year, you will be able to add up all of your expenses, your deductions, etc. But until you get to the end of the year, it can be hard to plan for those in advance. Yes, you can go buy a profit and loss statement, set aside tax money based on your net earnings there. However, what I recommend instead is basing it on your gross sales. If you base it on your gross numbers, you are going to be setting aside more than you need. Instead of doing a confusing calculation, set aside 30% of your total income as a self-employed individual. 30%. Set it aside in a separate bank account. Allow it to earn some interest and put it somewhere where you will not touch it. 30% allows you to set aside enough to cover that 15.3% self-employment tax, as well as an estimated amount for your income tax bracket. Setting aside 30% of your gross sales is a good rule of thumb because it allows you to overestimate the amount that you're setting aside for taxes. Having more is always going to be better. The worst thing is to come to your end of year taxes and have not enough to cover your income taxes. Setting aside 30% allows you a generous estimate which allocates 15.3% for self-employment tax and an additional portion for income tax, as that will vary a little bit depending on your individual tax bracket. The next thing that you need to make sure that you plan on is that you may be required to pay estimated quarterly income taxes, 1040 ES. If you file your income taxes and you are expected to owe at least $1,000 or more in taxes for next year, then you will be required to file 1040 ES, which are estimated quarterly income taxes. Estimated quarterly income taxes are due to be paid on January 15th, April 15th, June 15th, and September 15th. You'll be able to locate your 1040 ES payment vouchers within your actual tax return. So if you have a tax preparer, they will provide you with those forms. If you use a software such as TurboTax to do your filing, then you'll be able to locate your 1040 ES payment vouchers within your tax return. You can either mail in the payment voucher or you can submit payment to irs.gov. So that means that the very first time that you file taxes as a self-employed individual, expect that you will have to pay not only your income taxes, which are due at tax time, but also your first quarter estimated income taxes, because that first estimated payment is due on April 15th. Okay guys, I hope that was helpful. Please click like, subscribe, and leave me a comment down below.